Hi everyone, thank you for joining in. We are here today at the Private Capital Investment Conference being hosted at the ASX, and I'm delighted to be joined by Frances MacDonald, the co-founder and director of Capstone Funds. Now, Frances brings over 15 years of experience in strategy, M&A, and business planning to her role at Capstone Funds, where she leads a team focused on non-bank lending and high-yield returns. Frances, pleasure to have you here today.
Thank you for the great introduction.
Absolutely. Now, Frances, with your extensive experience in strategy, M&A, and business planning, can you tell us what motivated you to co-found Capstone Funds and what unique perspective does your background bring to the non-bank lending space?
Okay, for context, Capstone Funds is a family-run fund. It's actually by my husband and myself. And between us, we've got experience in infrastructure investment banking, large-scale debt, M&A and strategy. And we've always actually been really active in our own investment portfolio. So back going in 2017, 2018, we started to get into direct non-bank lending ourselves. And we were just so impressed by the risk-return proposition it had and the pipeline of opportunity. And that led us to start our first fund, I think in 2020, 2021, because we really saw that we had a unique strategy that we could bring to market. And it had such a strong pipeline that we decided to set up a fund, and we've gone from there.
Amazing. That's wonderful, Frances. Now, Capstone Funds focuses on a diversified portfolio of loans secured against Australian property assets. So could you share some insights into your investment strategy and how do you mitigate risks while aiming to deliver consistent return for investors?
Absolutely. So our strategy is to deliver outsized returns relative to the risk. Fundamentally, that's what we seek to do. And that's a great thing about a debt product is the risk that you take on. We do that by targeting a portfolio of short-term tenor loans at high interest rates. And that allows us to get double-digit return to our investors while still having very conservative risk management in place. So going on to risk management, capital preservation is number one at any debt fund. And there's a number of key ways that you risk mitigate. The first one really is, what's the asset that you're lending to? What's the value of it and what's your access to it? So a very key term in debt funds is your loan to value ratio, which is the amount that you lend versus the value of the asset. So at Capstone Funds, we have a 60% portfolio LVR. That means that for every $60 that we've lent, there's $100 of value that's there. And the second thing I mentioned is access is very important. So the majority of our assets, we have first ranking security. So if something goes wrong, we have the ability to seize and take that asset and recoup both our principal and interest. Now, another unique thing about our fund is we have a unique security feature that management are also invested as a first loss investor. We're 5 to 10% of the fund and we're required to be 5 to 10% of the fund, and we'll actually lose any of our money first before there's any risk to investor capital. And that's our way of really standing behind our product and having true skin in the game.
Amazing. Very insightful indeed, Frances. Now, one of the key topics that was discussed during the Access Yield panel was the rise of non-banking lending and the potential for high yield returns. So from your perspective, what factors are driving this trend and what opportunities do you see in this space?
So private credit is having a moment. I think, who was it? EY who recently said it's having a golden moment. Some analysts have even called it the asset class of the year in alternative investments. McKinsey has just reported that in the last year in alternative assets, it's been the fastest growing and the best performing alternative asset class. So it's true worldwide that private credit is absolutely having its moment. Why is that happening? Well, I think it's an understatement to say we've had a few years of macroeconomic uncertainty and volatility, and private credit's really shone in that market because private credit provides a lot of stability, it provides security, and it's high yield. So I saw a quote the other day that said, when you can get double-digit returns from private debt that's secured against real assets, why go elsewhere?
Right, very true. Now, as an experienced industry professional, what advice would you give to investors considering alternative investment options like non-bank lending funds, particularly in the current economic climate?
I think a few things I would encourage people to look at is that when choosing a fund, firstly, you need to understand your fund manager. What is their track record? What is their experience? Have they had a capital loss? What happens in the instance of a capital loss? The second thing I think is to really look at the defined investment criteria so you can see what they can invest in and what the criteria is. For example, we have a 60% portfolio LVR, but if our investment criteria lets us go up to 100% LVR, the risk profile of our fund could change within a few months. And then the third element is, what is the security that underlies the fund and how liquid is that? So everyone knows Australian real estate around capital cities has long been a source of resilience and growth. So that's a very liquid, strong asset, whereas some other assets that, such as receivables or equipment may be harder to sell. So understand the asset as well.
Amazing. Great insights, Frances. Now, reflecting on the broader theme of the Private Capital Investment Conference, how do you perceive the current state of private capital markets, particularly in relation to debt investments? And are there any emerging trends or dynamics that you find particularly noteworthy or impactful for investors?
I think a key takeaway I've had from today is I didn't realise that the growth of private markets has substantially outpaced that of public markets. So that's a really big takeaway for me. I think for non-bank lending, I'd go back to non-bank lending, and private credit is an extremely attractive asset class right now. It can give you double-digit returns. It's got the security that underlies it. It's stable. It's consistent. So it's a great source of passive income. And I think overall, that is just going to increase as an asset class for investors.
Amazing. Now, Frances, it's been wonderful to have you and your and Capstone Funds participate at the event today. So before we conclude the interview, could you share with us any key takeaways from your experience being here today?
It's just been wonderful to see the breadth of what other people are doing in the private markets, and to also be at this establishment at ASX. So I think the real big advantage of today is seeing the diversity of offerings that's available, which is, as an investor, is always a good thing to look at. How do you diversify your portfolio?
Very well said, Frances. Thank you so much for joining me in this interview, and we wish you all the luck with your venture moving forward. And to our viewers, thank you so much for tuning in. We hope that you found this interview as insightful as we did, and I look forward to seeing you all in our next interview. Thank you, Frances.
Thank you.